Hi everyone. Welcome to this week's market update. I'm here with Eric Anderson. Eric, after a whirlwind few weeks, things seem oddly quiet. What's going on?
You're right. It's almost eerie how calm the markets were today. But don't be fooled by the silence. This is the kind of calm you get when everyone's holding their breath. The big moment? April 2nd. That's when we expect President Trump to unveil a sweeping new set of tariffs, potentially impacting trillions in trade. Markets are in a kind of suspense mode. Volatility has cooled for now, but confidence is fragile. And while we're watching for macro shocks, even unexpected events, like the fire that shut down Heathrow Airport overnight, remind us just how vulnerable the global infrastructure really is. So, quiet? Yes. But it's the kind of quiet before a storm, not a sign of stability.
And what are we learning from the consumer and corporate America? Are there cracks starting to show?
Definitely a few hairline fractures appearing. Take Carnival Cruises. They're reporting today, and people are watching that one like a hawk. It's not just about boats and holidays. Carnival is a consumer bellwether. If bookings are slowing, it's a sign that consumers might be tightening their belts. Then there's FedEx. They posted decent results, but their outlook? Not so rosy. They lowered guidance for 2025 earnings, and the key red flag was weakness in their business-to-business segment. Why? You guessed it. Tariff concerns. This isn't just about one company. It's about the flow of goods, the confidence to invest, and the health of trade itself.
Let's talk about the Fed. There was a lot of noise around their updated outlook. What stood out to you?
It's like the Fed is squinting into a fog and hoping they've read the weather forecast right. They downgraded U.S. growth for 2025 to 1.7%, below street expectations, and nudged inflation higher to 2.7%. That combination? Slower growth, higher inflation? It's not exactly market-friendly. And they did this before we even know what the next tariff package will look like. We're flying blind. Sure, the Fed is still penciling in 2 rate cuts this year, but honestly, it feels like guesswork. 4 members of the FOMC don't see any cuts by year-end. Markets, though, aren't buying it. They're still pricing in 3 cuts by early 2026. That gap, between what the Fed says and what the market hears, is only widening.
Switching gears, India seems to be quietly outperforming. What's the story there?
India is one of those markets that creeps up on you. While everyone's been laser-focused on the US and China, India's just been quietly delivering. The February data came in strong. Industrial production grew 5%, way ahead of expectations. Inflation is back in check at 3.6%, which keeps the Reserve Bank comfortable, and foreign investors are noticing. March has seen net buying by foreign institutions as global money rotates out of China and into India. And don't forget, it's an election year. Historically, Indian equities tend to rally ahead of national elections, especially when investors expect policy continuity. Add in strong sectoral performance from infrastructure, defense, and PSU banks, and it's a compelling story.
Any surprises or side stories investors should be paying attention to?
Let's talk Elon Musk. Yes, again, Tesla shares jumped nearly 5% despite, or maybe because of, his latest legal entanglements. It's a weird market dynamic. The more distracted Musk seems to be by regulators and lawsuits, the better Tesla's stock performs. Maybe investors just want him focused on the cars, not crypto memes or courtroom battles. Also worth noting, Germany's moving full steam ahead on a massive $548 billion fiscal push for defense and infrastructure. It just passed the Bundestag and is heading to the Bundesrat. That's big for European growth prospects.
So, what's the takeaway for investors this week? What's the big theme?
The big theme is this. The world is waiting for clarity. Whether it's the Fed, trade policy, or global growth, we're all bracing for the next move. This is a time to stay nimble. Defensive positioning is still justified, hence the continued strength in gold, which is up over 6% this month.
That's it for this week. Stay tuned for more insights next time.